Hi everyone, it's Stuart here again. I hope you can hear me loud and clear. I'm in a different office tonight, so I've got my headset back on. I couldn't take my big microphone with me. Uh, anyway, yeah, it's all about the Fed, isn't it? Really, we're expecting this rate cut, 25 basis point is the consensus. There's two big banks, two big Wall Street banks. Possibly still nailing their names to the mast, looking for 25 basis points. It doesn't sound like my headset is working as far as the audio is concerned. Let me just check here. Mary had a little lamb. No, it looks like it is actually. Mary had a little lamb. Felice was white as snow. Yeah, no, that still looks okay. It's just in my ear. So if anybody joins me, let me just click on the chat box. Anybody joins me, let me know. Hope you can hear me. But as we can see here at the bottom of the board here, the main data, we'll come back to what else has happened today. We've had a cut from the Bank of Canada. We've had sticky, spiky inflation in the United Kingdom, and we've got Trump making a bit of himself in front of the king here in the United Kingdom. But anyway, more on that later. So projections are key. Whether what they can say and do is really beyond this. It's really, really interesting. Obviously, Steve Myron, still a member of Trump's government, claiming to keep Chinese walls between him and the rest of the government on this temporary appointment he's got on the Fed. What he said in the meeting will be really interesting when the minutes come out. But what he says later as a member of the government is also very interesting. Will he be banging on about wanting 50 basis points, 100 basis points before the end of the year? Some are talking about. We'll see. I said two banks. I think it was SocGen and there was another. I think it wasn't Citi. It was I can't remember. I read it earlier. Looking for 50 basis point today, but 25 basis point is the projection. So bringing the rate down to the 425 to 4% level. It's still, relatively very high compared to other central banks. Say the Canadians moved again today, 2.5%, just north of the border. Mr. Carney is got to deal with from his central bank. So yeah, see what obviously how Trump reacts. Whether he will physically react tonight, given that he's in the UK, is it this very pomp and circumstance state gala, state dinner tonight in Windsor, just west of Heathrow in the UK. So yeah, see what all pans out. As far as the markets are concerned, the stocks have come off, still near all-time highs. Have come off recent highs. We were long this Nasdaq trade. We've been trailing our stop loss up. We rammed it up really tightly last night, and it's come back today and taken it out. 710 point gain, good 3%, 3.3%, I think it was gain on that trend here on the Nasdaq from it was from the 4th of September. Very, very nearly got took out. I came back to our entry, and my stop loss at the time had been moved up to the entry within a smidge here on the 5th, following the non-farm payroll data. The S&P trade did get taken out that day, but that re-entered on the 8th, on the Monday. Nasdaq didn't trigger since, but we've been just ramming this up, and so we got took out last night for a healthy 710 points. We just been taken out today, I should say, on the Nasdaq. So nice gain for the week. We've actually had, I can't remember last time I had this. We've had 10 closed trades this week, and all of them they're all winners. Some of them are quite small, 6 pips, 50 pips, 55 pips, 15 pips, 15 pips, but they're all actually winners. And I can't remember the last time that happened so far. Obviously, the week isn't over yet; it's only Wednesday, but yeah, 11 pips, 30 pips, 7 pips, but 10 winning trades, and we are 116 points to the good on the forex, and 700 points good on the indexes. So sorry about this camera angle. I say we're not in our normal studio tonight, but there we go. So Nasdaq down. The DAX today closed also down. Let's trade lockup messing me about. S&P 500 did actually is still open. That's coming within striking distance of our stop loss as well. But again, this is the one we say we got in. That's our stop loss was here. It got took out there on that move on the non-farm payroll day. We re-entered on the Monday, and we've been trailing this one up as well. So this is in the money as well. And lots of other forex positions as well. So as I say, really there's lots going on tonight. So it's very, very difficult meeting for them to get through. There's lots of projections to come forward as well. There's the economic projections, there's the rate projections, the dot plots. We don't get this every meeting. It's a big, big meeting. It's this September meeting. It sets the tone for the rest of the year. It looks like we may be going again in October. If not in October, certainly before the end of the year. Many are now talking about 3 rate cuts, including tonight, so 2 more after tonight, if they're 25 basis points. Whether they've got whether they feel like they can go with 50 basis points, I say only 2 banks are saying that. The other caveat we've got to remember as well, guys, is remember there's some quite significant doves on that Fed as well, both voters and non-voters, and some of them are saying, not loudly on the particular sort of wedge of discussion, but some of them, Jatin, hi, also that live, also good. It's okay, it's working. You can hear me. That's the main thing. Just Jatin, what I was about to say was, because of we're such in an early phase of the impact the tariffs are having on the US economy. Obviously, there's always been focus recently with the recalibration of the jobs market and the clear weakening in the jobs market. Obviously, we've got the weekly claims tomorrow, and the continuing claims will be really key. Is it going to get over? If it's over 2 million, that'll be really twitchy for markets tomorrow. If we get a pretty hawkish tone from Powell today. But going on the dovish side, if these tariffs continue to, or the impact of them continues to be sort of a bit negligible, they're being absorbed by businesses, that gives the administration the power to move this forward and cut rates very quickly. The flip side is, though, if the tariff worry about inflation, the impact on goods, on spending, on businesses, on Joe Public in the United States starts to bite, then we could see some significant sort of falling apart of this policy. So it's very, very much in the mix. Obviously, the administration remained very bullish. They keep talking about how much tariff they've actually taken, but somebody's got to pay for that. And the end user, the end consumer, the end business in the United States is the guy that's paying for it, the team that are paying for it, the people that are paying for it. Obviously, Trump's philosophy is, re-onboard all these, or trying to create new jobs, particularly in manufacturing in the United States. That hasn't happened. We've seen a massive contraction in construction jobs, for instance. The housing market is really quite tight, as you can see there. That number missed again this morning. Just you can see there right at the top there, housing starts being overlooked today, but a big look at this. Housing starts negative 8.5%, housing starts 1.3 million, still fairly healthy, but it's it's a big miss from what was expected. So as just an example, so the debate is still there. It's not over. Debate is far from over. So much as the administration trying to suggest otherwise. Jatin, good afternoon, good evening for you. Hope you're well. So there we go. That's where we are. And I say the stocks have rolled over. Obviously, the dollar's sort of going sideways. It remains relatively weak. Just put the dollars in here, USD. Let's pick the euro, 118.50. So this massive rally we've seen in the euro. Did we get? No, that was. When was that? Is that today? That's why I've been away from the charts. So that might have been stopped out. It looks like. Let's go up to 15. That second part of that. Maybe not. But that's the 118.36. It looks like that might have been stopped out this morning. I've been away from my charts. I've been doing all sorts today. More on that later. Yeah, that I'll check my trading platform for that's actually been taken out, but the spread might have kept us in. If not, that's closed as well. That euro long we were having. There's our entry from down there, so it's a healthy win on that one, that euro dollar as well. The other one that was still open was the Kiwis. Let's look at that. That's been again. Oh, look at that. That one's been a bit luckier. 59.66 is still in play. We come within that, so that's still up and running. And again, that's one we got in down here. I can't remember when that opened. The system's not letting me put more lines on, so I can't tell. But so yeah, dollar remains weaker, and you see here today it's come back a bit today. This is it's 15-minute chart, not to the hourly chart. It's come back a bit today, but still remains relatively weak. We've just used the Kiwi as an example. We got to the daily time frame. It's this big old rally. Obviously, the Aussie was the big mover. It's come again. It's another one that's come back today. It's ran into a resistance area, but it's come back. But you can see that daily time frame here on the Aussie, right old run. 66.80, 67 was in target. 66.85 we got as highest. So dollar remains pressured on this expectation of this cut and perhaps more cuts to come. It's really the comments. It's what's going to be said, particularly by Myron. Remember, we're expecting Myron, Bowman, and Waller to look for possibly or argue for 50 basis point cut, if not more. And as I say, there may be some dissenters on the other side that say, no, we don't want a rate cut at all. So I'm expecting that. I'm expecting some to say no. The majority go for the 25 and at least the 3 to go for 25. There may be more. Who knows when it actually comes to the vote. But it's been a very interesting 2 days. And then in half an hour's time, we've got the a press conference where Jay Powell will be facing the press. So let's just have a quick look as we come across the rate decision is literally imminent. Yields, stocks sort of flat. So it's 0.25% as expected. No particular surprise there. Let me have a look at who's how the vote has actually gone. If I just let's have a look at the statement. I'm going to pick out some highlights. I've just got the statement here. Head of the decision about for 25. Yeah, let's and I've got no let's have a look at see what, if my calendar gives me a vote. It doesn't give me the vote on here, does it? If I just update that economic projections, it might give me the vote. So just bear with me a sec, guys. So that's inflation on the US earlier. Here we go. So projections are very much in line with expectations. First year, third quarter, that's weaker. That's weaker. So it's a quick eyeball of those. The rate projections are down. Obviously, they've cut by the 25 basis points as expected. There's nothing in there about the voting as far as I can see. I don't know if there's anything across the board. Cuts the target rate. Dollar weakens immediately on that, as you might expect. The dollar index is at 96.48 as we go down. We'll have a just look at the Aussie. It's the one we had on there. The Aussie 66.90. The Aussie looks like it's .67. Looks inevitable. Euro 118.85. These are September 2021. These are 4-year highs for the euro dollar. If we just go up to the weekly and see how weak the dollar has got over this ensuing period, you can see this 119 area. This takes us back to September 2021. So obviously it looks like a fairly hawkish cut, and also looks like the what's in the statement, which I haven't actually managed to see at the moment, looks like it's fairly looking like there may be more to come, or there may be some suggestion more to come. Excuse me. Really interested to see how Powell plays this in 27 minutes when it comes off. Mirren voted for 50. He did actually vote for it. There's no, interestingly. So I was talking about potential dissenters, both 0 and 50. 50. Only Mirren has gone for 50. That's really interesting. So Waller and Bowman have obviously kept the party in line. They've gone for 25 basis points. So Mirren, member of the government, you wouldn't expect him anything else if he was trying to line himself up for the governorship. It doesn't look like that is going to happen, but he's certainly playing the political angle. So what the markets are really going to start worrying about now, particularly that he's the only dissenter, is this independence of the Federal Reserve, the FOMC. Separate limited company, supposed to be outside of government interference, clearly isn't, with a president like Trump in the White House, and got one of his guys on the board and got one of his guys voting for 50 basis points. I'm sure he really thinks that, but he's in line with government thinking. So whether we get another 25 in October on the back of that, that's looking with regard to the way the market has reacted to the move for the dollar. You can see here this is the weekly chart, guys. So we're up here at 119 within 118.95. So 119. We haven't been to 119. This is a big blue line up here, guys. Since it's beyond September. In fact, it's back into August. So we were at September 2021, 4-year highs. Yesterday as we went higher, and so now. And now we are now back over 4 years ago, back to August 2021. Last time the euro dollar cross was all the way back up here. So heady days, weekdays for the dollar. Aussie looks inevitable. It's going to get to .67. Sterling already over 137. And actually, let's put the hourly charts on. Reset that. Sorry, that was the weekly charts we were just looking at. So major moves against the dollar, guys. If you're trying to trade this on the short-term basis, we're already 5 minutes in. So if we just come back to the 5-minute time frame, that's bid. Getting filled on these prices will be easier now than it was when the price first broke. But be very, very careful. Spreads do move around at such times. Also, the big players, if somebody's got a lot of dollars to offload, or it's got an order to buy a lot of dollars, they're going to be buying them now. As they've got cheaper on that, are looking to drip stuff into the market on these big moves on the major news. So dollar has weakened quite significantly on that number. So the benchmark is down to 4% to 4.25. The yields are also a bit firmer, but they're down on the day, but they're up from where they were before. Currently, the US 10-year is at 3.99, so it's back under .4. 2-year back at 3.4697, so and falling, so under 3.5 significantly for the 2-year. 2-year, remember, is very reflective of short-term interest rates. So weaker dollar. Let's have a look what that's done to the gold market. One would expect gold to have picked up on that. Indeed, interesting move there on that 5-minute chart. Gold got a lot of speculators, but might have got whacked on the. It might have been just the widening of the spread on that one. But gold 369.92. Take this up to the hourly chart. See what it's been up since lunchtime. It's been rising all afternoon so far. It's back over its 50 hour. This is the 50. This line here is the 50 period. You see here the 50 period moving average to the upside. So gold's bid, you can see on the 4-hour chart, is very much set anyway. We were all-time highs again for gold as we push higher. 3,700 here on this derivative chart. The futures, God knows where the futures market is. It must be closer to 3.7 if I've got the futures for gold. COMEX gold is 3,725, 3,721, moving higher. Stocks will have also benefited from that. So unfortunately, we got stopped out on that Nasdaq move earlier. Perhaps I was a bit too aggressive with the stop loss yesterday ahead of this major news. I'm not sure what I was thinking about. There you go. It's what you do. So Nasdaq will have moved higher, undoubtedly. It's got the 5-minute chart. There's the interesting, giving most of it, some of it back, but yeah, we move higher here in the 5-minute chart, 15-minute chart. Yeah, so move it up from our stop loss. Where we take our take profit. Really, it's not really a stop loss, but up on the news of the Fed cutting rates by 25 basis points as expected. Big surprise really is that it was only Mirren. There's a note here: the lack of other dissents is partly notable as Weller or Bowman could have stopped out along with Mirren. It sends a message of unity aside from Mirren, which isn't a surprise. So they've played, as I said earlier, they've played the long game for their colleagues, both Michelle Bowman and Kevin Weller. This might rule Weller out of the chairmanship. That's absolutely looking that way. So it's back to Walsh, and again, one of Trump's right-hand men, the other Kevin, as potential head of the Fed. As early as announcement could be in the next couple of weeks, certainly. But and therefore, poor old Jay Powell, stuck with a lackluster chair until May. But it could be really difficult and stay on in the role, not as chair, but as member of the Fed, because that's what he's entitled to. Again, he's a bigger man than that, and he probably won't. For October, the market's pricing is 79% of a 25 basis point. Let's just have a quick look at what the CME futures. It won't have really updated yet. It's just an internet feed, but it still gives us an idea of what's going on. Let me find my FedWatch tool and see what that's telling us, or what the market is telling us on the immediate aftermath. So there's a September meet. It was 96 in the end. This hasn't updated by looks of things. Yeah, we're down actually. We were around about 79%. It's now a 75%. So that hasn't really updated. I don't think really since the numbers come out. So a 22% chance of a no change. This is where we are now for 400, 425. This is where we are now. Oh, sorry, my head's too big, isn't it? There we are. This is where we are now. 22 we've come down to 400, 425. So 22% chance of a no change come the October meeting. But remember, the October meeting is another, it's a month plus. It's a good 6 weeks away. 75% or 74.8% chance of another 25 basis point cut, and a jumbo 50% cut now is a 3% chance. So that's again come down. So you can see here. As of September, that's ahead of the date at 12:55. So it's ahead of the data. This hasn't updated as you might expect. So, it's a free internet version. We'll come back to that later if we're still around. There we are. That's the updated one. That was, when was that done? That was done just after the date has come. Okay, so that's obviously happened. So let's go back to the. There we go. That seems much more likely. So, and again, so now we have a nailed on a 98% chance of a cut in October. So 80%, and only 0.6% chance of another of a jumbo 50% cut and a 1% chance of no change at all. You see how that's whipped around, massive switch. So they have finally moved, the first of many. Some say maybe not. The tariff impact of the tariff, we shall see. Stocks starting to turn low. There might be something that somebody said, or something in the statement that has spooked stocks immediately, because it moved up quite significantly. Now it's moving back down. Let's have a look, see what the forex. It might be just the delay on my feed here, given it's such a high impact now. But no, the dollar still, or the 5-minute chart, the euro still holding on to those gains from earlier. So it's given up a bit in this current minute. Obviously, the fact he went to 119, he's 4 years out. People saying, fine, I'll take the money off the board, and the plots are coming in. So the median Look as we project forward. Let me just go back to the calendar. Let me absorb that a little bit better. So yeah, these are the lots of 3 points. So that's down from where we were. That's in. That's down. That's down. That's in line. That's down. That's down. Yes. So it's a weaker projection going forward. So it looks like the likelihood of more cuts to come has increased. Hence the move against the dollar. So how do we benefit from this? Well, stocks should benefit. They've turned around interestingly on that data, which is a bit of a surprise, to be honest. Particularly the tech ones that are particularly rate sensitive. So we cheaper money, lower rates. Ultimately benefit the high cash burn, the high investment portfolios of the tech companies, which are driving the stock markets. But the worry presumably comes as we move forward. Still the unknown about the real impact of tariffs. Okay, right. So let's have a quick highlight of the statement. Activity is moderated in the first half. Jobs gains have slowed. Well, that's a given, isn't it? With those massive revisions we saw. Removes the unemployment remains low to stay on edge. Fed median forecast shows 2 more cuts this year. This year, but year-end and beyond forecasts have unchanged, so we haven't changed now. Statement says inflation has moved up and remains somewhat elevated. Inflation remains somewhat elevated. It's added that it's moved up and remained elevated. Last time it just said somewhat elevated. It's still a worry. So those doves on the Fed have got a bit of a sway. As I said before, the fact that Kevin Weller and Michelle Bowman that came out, a couple of months ago, I think it is now, sort of talking about a 50 basis point cut. They should have cut earlier, and sort of throwing a hat in the ring as the next Fed chair when it all started to kick off. The fact they've reversed to ranks and seems some unity in the committee supporting their chairman Jay Powell suggests that Kevin Weller is not going to be the next is not going to be the next chair of the Fed. Stephen Mirren obviously isn't either, but that's looking like Kevin Walsh. His odds have probably got shortened quite significantly. But whoever it is, that they're going to cut more aggressively than certainly Powell has. They're more in line with this administration. Currently, things could change if we get a big surprise, or these, the worst case scenario of the tariff impacts, these glitches to trade continue to drag on. It could get quite significant for the US economy. It's not just jobs, it's not just this slowing we're seeing in the housing and the construction, and decline, people cutting jobs. That will start to happen. Remember, we haven't seen at the moment. Everybody's been focusing on the fact that jobs aren't getting created, people aren't hiring, but people aren't really losing their jobs. If that claims number that we're going to see, if I just scroll forward to tomorrow, so this. Oh dear, it's all of this, isn't it? The claims, where's our existing claims? The 4 weekly average that starts to pick up, but the initial claims, we had that spike. Oh, well, I'm saying a spike. It might not be up to 265. If this one, the continuing claims, if that starts moving over 2 million, that will start sending ripples around the Washington as well. So that's certainly one to watch. Okay, so that's the Fed. Biggest news of the month. They've finally cut rates. It's been a long time coming. Too long for many, as we say. The dollar that's been weakening and has been on a weak break for, as we say, just go back to just use the euro again as an example, because the euro's benefited the most. It's been rallying from these lows all year, basically. The dollar's been weakening all year. This is February, January. The beginning of the year is just about here on this chart here. So you can see, the trend. We've been way above our 50-day moving average, and only a few days we've seen a bit of strength in the dollar. We sort of rippled through this, pivoted through this 117 through the summer. And here, as we get into the autumn months, this first couple of weeks of September, the euro strengthened. Well, yeah, it's the dollar weakening as the euro's also strengthening at the same time. So we've had a big old move up back to these 4-year highs at 119, so 120 now. If we can breach 190, the big significant 120 area will be talked about again. But there's no inevitability of that at all, of course. Remember, we were looking at not that long ago, we were talking about parity, weren't we? Down here, this is the big decline during last year. This is December last year. In January, when we were down here at 102, and parity looked inevitable. Didn't happen, and anything but that has happened since then. We've had some significant moves in Germany and changing the fiscal setup in Europe, and the euro has rallied as well as the dollar weakening. The other big mover this year has been the Swiss franc against the dollar. The Swissy against the franc, the dollar, and this is our 2025. That's the beginning of January, so it's a big old collapse. Slight bounce. And again, you can see here the 50-day has been very much on your side. We it looked like we were getting a bit of recovery here in the summer for the dollar, but we held and then we'd gone down, and now look what's happening now today. They finally cut, and we're finally at year lows at 78.35 for the Swiss franc against the dollar. Again, it's not just year lows. If we go up to the weekly chart, you can see here we are actually, unfortunately, this only goes back to 2020, but we're way off the chart. So the Swissy is at multi-year highs against the US dollar. It's the weekly chart for the Swiss franc against the dollar, and it only goes back. This chart only goes back to 2020. So what can I say? There you go. They'll be twitching in Zurich as well, and other parts of Switzerland about the strength of the Swiss franc there, particularly against the dollar. Obviously, we've had this, they've got these 39% tariffs, Switzerland, and for exports of goods into the US. So, and there's been no change on that. But anyway, yeah, it's our best mover of the major currencies for the year. The Aussie's doing really well as well against the weakening dollar, as we saw earlier. So we'll have a quick look at that in a bit more detail. Where's the Aussie dollar gone? Aussie dollar here again at the weekly chart. It was weakening, and here as we got to the spring, we had the nadir of the Liberation Day, and the dollar's just weakened against the commodity currencies since then very significantly. The Kiwi's got a similar setup. Actually, just use the USD because it's the one that's in vogue at the moment. Same with the Kiwi. So you see the Kiwi, very very similar pattern there to the Aussie, weaker for most for the first few months of the year, first quarter of the year, and then here once the April low was in and the tariff Liberation Day announcement, dollars weakened significantly, even against something like the Kiwi. So there we go. Dollar yen, the other major we haven't actually looked at. Problem with the yen has got as many problems as the dollar, and so they're cancelling each other out under really sideways action for dollar yen movement. So 145.70 at the moment. The 50-day moving average sits at 149 to break us to the upside, but that's not going anywhere with any clear direction at the moment. It's weakening. The momentum's weakening. We've got political issues in Japan as well. So there we go. So just go back to the rest of, unless somebody's got something they want to look at. Jatin, do you want a particular asset? I know you're a gold trader. Gold, interestingly, should have. Let's have a look at gold. That's come back quite significantly, hasn't it? But we're up on the day still. So 3686 up on the day. So it's the week. Sorry. Thought we are actually down on the day. I thought we were sort of running out of steam, but we are at all-time highs. Let's not get too carried away as far as today's concerned. I don't know what that's all about. That might be our feeds, guys. Don't get too. What's happened there? That's obviously the variability of the spread on the data coming out. But you can see it's had negligible impact, interestingly. So it's more in the forex field where things are moving. So gold went through 3,700, 3,700, and it still remains quite bid. That's the vagrancies of trying to trade that when the news happens, guys. This isn't us. This will be the spread genuinely moving around on the news there. So gold's taken a bit of a hit there, and the dollar's taken a bit of a hit. Consequently, one would imagine Bitcoin has benefited by 115,600. Not particularly, it would be my immediate response to that. So there's the 7 o'clock candle here in the UK. We went high. We went to 16. Where did we go? 16,275, and we're back to 15,500, 16,600 at the moment. So that we're lower today. So look, we're lower today, and indeed we are. So 717,000 this morning, and we've been down all day. But we are still bid. We've broken out. I'd have been, as I said to you on the other set, we'd have been long on this from the 10th as it broke over the 20-day. There it is over the 50-day here on the 12th, over that key, 112,000, which is down here. And we're now consolidating around this 115,000, haven't got us 170,000. So that's still bid to the upside, to be honest. We're holding the 50-day moving average as far as Bitcoin is concerned. So, what a move. So finally, we have a move from the Fed, and we cut at long last. I'm going to go off and listen to, in 5 minutes, going to listen to Powell's statement. I'll report back to you tomorrow. But for the rest of today, it's been quite a key day as well. As I said, politically, we got the UK's got President Trump on a state visit, but we had continually sticky inflation in the United Kingdom this morning. The headline that's grabbed everybody's attention is the 3.8% for the headline number. The core actually slipped a tad and came in better than expected at 3.6, but it's still, nearly twice as much as it should be there. So more bad news for Sir Keir Starmer. RPI was down. RPI is all around, lots of wage negotiations around retail price index rather than consumer price index, and things like rents often get tied to RPI. So that's showing the weakening in some of the rental figures and some of the housing sector as well in the UK. Other data today was CPI of the EU down at 2%. That's better than expected. So that's good news for the euro. That's why the euros continue to receive a bit. And I say we were talking about housing earlier, a weakness in the permits and the starts in the housing out of the US. Bank of Canada, as expected, cut rates. So if we haven't actually looked at the Canadian dollar, have we? Look at the Canadian dollar. That was very much in line with expectation. No surprises there. So Canadian dollar sort of cancelling each other out as we slide south. It's more to do with the weaker dollar than the Canadian dollar. So if we just come back to today's hourly move, there's you can't really tell, can you, where the Bank of Canada came out. It was here at 245. We'd been drifting higher, bit of a weaker Canadian dollar, but the weakness from the that Myron 50 basis point, nobody else going with him, has hit the US dollar, and low as 137.27. That's quite a long time low as well for that pair. Let's just have a look at that, where that's looking like. So we got to 10-day low there this morning, just now, as the data's come out for the Canadian dollar. So, and I say no particular surprises out of north of the border, but it's sort of 2.5%. That's the sort of numbers the president in Washington would like to see. That's for sure. Massive drawdown here as well in the oil inventories. I know not many of you trade oil, but it's been, I've got a bit fed up with it. It's going sideways. We would say we got this floor at 62, the top of the channel at 64, 65, and nothing really is moving that dial at the moment. So again, another one you can see here, all of August under the 50-day moving average, and all of September also under the 50-day moving average. So we're sort of eking lower into the quite high, a big a demand season for oil, but obviously all sorts of geopolitical things could move that market, anywhere from Russia to the Gulf to into Venezuela and other parts of the world as well. Obviously, things going on in China, in the Taiwanese Straits, and things like that all impact the oil price. So 62 is the floor, 64 is 65 is the top, 64 is the top of the channel really, and sideways action on the oil market despite that massive drawdown we got. You see, hardly, I mean, days gone by would have had a big old move on that drawdown earlier. It wasn't the case today. There's the inventories at 230. So tomorrow, as I said, tomorrow key. We got the Bank of England tomorrow. I'll be live for that Thursday. We've also got the initial jobs claims, as you said, and the weekly claim and the weekly. The continuing claims and the initial claims. Philly Fed also tomorrow. Will it be as volatile as the Empire State was on Monday? Remember that came in much lower than expected. So I'll leave you this evening. We have a cut from the Fed. I'm off to see what Mr. Powell has got to say at his press conference. Take care, stay safe, my friends, and I'll see you all again tomorrow back in my normal office with normal lighting, normal background, and without the headset on. Take care, be good. See you soon. All the best, everyone. Bye bye.